All right, welcome to The Explainer. Today we're doing something really exciting. We are completely dissecting the mechanics, the inherent risks, and honestly, the truly wild long-term forecasts surrounding the Orca protocol. If you've been paying any attention to the Solana ecosystem lately, you already know that decentralized exchanges are, well, they're a dime a dozen. But Orca? Orca has managed to carve out this very specific, highly contested niche for itself. So let's figure out what's really happening under the hood here, how it operates, why big institutions are suddenly paying attention, and what the numbers actually say about its chances for survival.
And you know, that really brings us to the ultimate question we need to answer today. Does Orca actually have a solid, long-term future, or is it just going to be another drop in the highly volatile DeFi ocean? In an industry where protocols literally rise and fall in the span of a single financial quarter, establishing real permanence, that is incredibly difficult.
So to understand where Orca is headed, we kind of have to look at where it sits right now. Today, Orca commands a market cap of $115.85 million. That number firmly positions it as a significant mid-cap asset. It's definitely not some small, obscure project anymore, but it's also not a trillion-dollar behemoth yet. It is sitting right in that ultra-reactive, high-growth, high-stakes territory where the major market moves just happen so fast.
Section 1. Meet the Solana Safe Haven.
Okay, let's dive right into Orca's foundational role. They've actively cultivated a reputation that really sets them apart from the usual chaotic energy you find in decentralized finance. It's essentially become known as a safe haven within that super high-speed Solana environment. And why is that? Well, because it survived the major drift protocol challenges of 2025, and it did it without losing user funds. The protocol is secured by 4 independent audits, it runs on a completely transparent open-source code base, and it actively promotes what they like to call trusted DeFi standards. In our current era of constant cross-chain bridge hacks, having this Solana-native security model is just a massive selling point.
As analysts over at Weeks recently noted, Orca is just no longer a basic tool for retail traders to swap coins. It is totally transitioned into a sophisticated liquidity layer. And that is a vital distinction. It basically means Orca is functioning as the back-end plumbing for the broader financial world, serving these massive institutional liquidity providers just as much, if not way more, than your everyday retail trader.
Let's move to Section 2, Under the Hood with Whirlpools.
To really grasp the technology powering these institutional-grade swaps, we have to look at the sheer difference in efficiency. Think about traditional automated market makers for a second. They take liquidity and they spread it incredibly thin across an infinite price range. So, what happens? Most of that capital just sits there idle, doing absolutely nothing. But Orca uses these things called Whirlpools, which rely on concentrated liquidity. This totally flips the script, allowing providers to allocate their capital only within specific, highly active price intervals. So what does this actually mean for the users? For professional market makers, it means insanely high capital efficiency. They are literally earning more fees using less capital. And for the everyday trader, it translates directly into much lower slippage on their trades. Plus, when you add in beautifully simple UI tools like the fair price indicator to stop those awful unexpected market surprises and the magic bar for instant token navigation, you end up with this incredibly complex system that is just remarkably user-friendly.
Section 3. The Orca token's utility.
Now, we all know that a great protocol doesn't always automatically equal a great token. So what actually gives the Orca token its value, aside from, the usual crypto market speculation? The answer lies in a really cool concept called liquidity as a service. Think of this as the ultimate picks and shovels strategy. Whenever a new project launches on Solana, they desperately need deep liquidity to function, period. Orca provides that infrastructure. Because Orca is collecting fees across all these different pools, the platform and by extension, the token's ecosystem wins. It wins regardless of which specific meme coin or utility token happens to be trending that week.
And because of that fundamental utility, Orca actually trades a lot more like a DeFi blue chip. When we look at the correlation data, Orca's price movements align really positively with major heavyweights like Lido DAO and Uniswap, while actually moving negatively or just totally independently against assets like WorldCoin or Layer 0. The market is pricing Orca based on its actual decentralized exchange utility, not just blindly following the legacy coin market.
Beyond those macro market correlations, The token has some very real, tangible utility within its own ecosystem. If you hold it, you get governance voting rights through the Orca DAO, which means you're directly shaping the protocol's future. It's earned as a reward if you're a liquidity provider. You can lock it up as XORCA to get boosted yields. And I love this part. The protocol even ties the token's ecosystem into real-world environmental sustainability by directly supporting ocean conservation efforts.
Section 4. Price projections to 2050. Now, what's really interesting about this next section is the wild contrast in the numbers.
Let's talk immediate technicals for a second. And honestly, it's a bit of a sobering reality check. The indicators are currently flashing bearish. The MACD has formed a dead cross, which indicates cooling momentum, and the relative strength index is sitting way up at 81.15. Now, anything above 70 indicates an asset is heavily overbought. So that tells us we could very well see a short-term dip or a consolidation phase before we get any new upward movement.
But when you zoom out, wow, the algorithms paint a completely different picture. CoinCodec's long-term projection models, which actually factor in things like annual user growth rates and Bitcoin halving cycles, they do expect a slight dip by the end of 2026 down to 1.77. But look at 2030, a jump to $7.68. That represents over 300% growth. By 2040 and 2050, these models project it climbing well into the double digits, forecasting a massive 830% growth over the next few decades, assuming, of course, that Solana remains a dominant network.
To put those really futuristic numbers into perspective, let's just look at where we've already been. Orca's all-time low was just 35 cents. Its current price is hovering somewhere around $1.91, but its all-time high was an explosive $22.29. So while a $17 target by 2050 might sound completely astronomical compared to today, it is actually still well below the historical extremes this asset has already proven it can hit under the right market conditions.
Section 5. Volatility, whales, and regulations.
Reaching those massive long-term targets is definitely not a smooth, guaranteed ride. We have to objectively examine the severe market risks here. And this number right here is the absolute perfect place to start. 34.94%. That is Orca's current volatility rating. The market officially categorizes this as extremely high. As a mid-cap asset, Orca is just incredibly reactive, which means you really have to be prepared for stomach-turning drops just as much as those euphoric climbs.
A huge chunk of that volatility, it comes directly from market whales. Like the week's analysts noted, in early 2026, Orca experienced a 54% surge in a single day. That kind of movement, especially when it's driven by massive volume spikes relative to its market cap, it strongly signals potential pump and dump dynamics. It is a documented reality that large holders can and do severely sway this market. So careful risk management is absolutely essential.
Then you have to add in the looming shadow of DeFi regulation. As global financial frameworks start seriously cracking down on automated protocols, Orca faces this massive challenge. How do they remain truly decentralized while somehow still navigating compliance? The Orca DAO is going to play such a critical role here because the token holders will literally have to vote on how to adapt the protocol's treasury and smart contracts to survive that regulatory scrutiny, all without losing their core, permissionless identity.
So, the crucial point is Section 6, the long-term outlook. How does all of this actually come together to define Orca's trajectory? Well, we can trace a very, very clear evolution here. Step 1, it started out as a really friendly, simple retail swap tool. Step 2, it upgraded to an advanced liquidity layer with the introduction of those Whirlpools. And Step 3, which is exactly where we are right now, it is establishing itself as an institutional-grade back-end infrastructure provider. In fact, a recent 70% rally was driven entirely by Orca being selected as the primary venue for institutional tokenized indices. They're literally embedding themselves into the foundation of the ecosystem. According to the market analyses we've reviewed today, Orca's survival over the coming decades really just hinges on 3 critical pillars. First, they absolutely must maintain their technological edge and concentrated liquidity against some seriously fierce competition. Second, they have to maintain absolute, unbreachable smart contract security. And third, they have to continue fostering a developer-friendly ecosystem so that the next generation of dApps decides to build directly on top of their liquidity pools.
Which really leaves us with one final, pretty provocative thought to ponder. As you look at your own strategies and you look at where decentralized finance is heading, you have to ask yourself, Is the real future of crypto wealth found in trying to time the market on trending meme coins? Or does true sustainable value lie in actually owning a piece of the infrastructure that powers all of them? Thank you so much for joining me for this explainer, and I'll catch you next time.